I guess we're seeing just a bit more of this malaise coming through the Asian markets, an extension of yesterday's trading, extension of yesterday's selling that we've been seeing. If we look around the map, around the traps today, we're seeing Japan under a bit of pressure, down over 1%. Chinese equity markets are both in the mainland and in Hong Kong under a bit of pressure as well. And you're seeing the ASX come back out of the traps after being closed yesterday, down about 0.3% at the moment. So a little bit of a selling coming through. We're not seeing that reverberated in any further selling coming through in US futures, although the cash session there did have a nice rally going into the close. And of course, everyone's focused on Apple's earnings and Twitter to a lesser extent in the post-market and the impact that that could have on US futures for tomorrow's Asian session. But ultimately, you are seeing a bit of weakness coming through. I think in Japan, the interesting news there we've seen is that the Government Pension Investment Fund, the GPIF, are considering to increase their hedge ratios on some of their foreign assets. Of course, they do decide to ramp up that. They could be looking to come out and sell US dollars and euros and actually buy back Japanese yen to hedge some of that portfolio expansion. And of course, that could be a headwind to the Japanese economy going forward. We've also seen the Aussie dollar continue to oscillate around the 77 handle. The interesting thing there is that we are seeing rebar futures under a little bit of pressure, and we are seeing iron ore futures down around about 4.5%. So if that continues after what we saw last week, then I think we could see a real strong profit-taking exercise, and that could be a big headwind to the Australian dollar. So that's something I'm looking at. Has the Australian peaked up around this some 77, 78 cents? It's looking more and more likely that that's the case. So something we're looking in for the rest of the session. But clearly there's enough reasons for traders to sit on their hands today, and I think that's exactly what they're doing.